Good morning, everybody. Hope you had a great evening last night. The snow started to melt yesterday. It should be gone by the weekend. Warm weather through Christmas, and we're supposed to snap cold after that. And it is that time of year when we would expect to snap cold, as it is for you. I'm not too sure who will have a white Christmas, but it looks like there's a big storm moving east, so I know that there's a shot at a white Christmas for at least those north of the Mason-Dixon line and east of the Mississippi, which is fun for the kids and everybody too. Good morning, Chuck. Okay, today there is no news overnight. The stock markets around the globe followed yesterday's explosive rally in the E-mini. The E-mini has come 100 points in 2 days since the 2 o'clock Eastern on Wednesday. You cannot trade these markets today without protection. I mean, you can just get your head handed to you. In fact, you ought to put your stop in before you place your protective stop in before you place the regular order. That's how dangerous these markets are. Having said that, because we read them, we understand the computer-based trading model. I don't have any problems with it. In fact, I kind of like it. As I maintain, and since you've heard since joining us, we don't have to know who, we don't have to know why. We can just see that they are and trade accordingly. And that's nice. It's nice. That's not all bad. If you understand the game, the rules of the games, and you know how to play the game, then everything else kind of falls into place. If you don't understand the market's language, if you don't know the rules by which the game is played, then you're at a distinct disadvantage. And the fundamentalist has been at a distinct disadvantage since really March of 2009. Okay, we have this last rotate up in T period. The financials stopped at this 4-letter ledge right here. So this 126.28 is pretty formidable resistance. Yesterday's high was 23.5. We left yesterday's market saying sell failure to take out 16 to 20. So 15 to 19 was the sell. Looking at where we are right now, trying to guess structurally where the market might be, we have a 20 to 23 is our first resistance band, followed by 24 to 28. So the issue is, can we get through 16 or not? We're currently at 14. I want to put a 15 to 19. The lower end of the band is pretty aggressive, and then the 23 to 27 is not so aggressive. Would like to get that done against 20, if at all possible. Lean against that low, lean against that high, but that may not be possible. Today's market's going to boil down to the direction of the E-mini. It is quad witching hour. The recent highs at, I believe it's 20.78 are within reach. The market knows there's stops above that. On options expiration day, they'll run it up to freeze the calls. They'll run it down to freeze the puts, and they close somewhere in the middle. So the actual open interest on the E-mini is 20.45 to 20.75. And I expect the market to trade in between that number today, but that market could take out 20.78 and continue running higher. You just don't know. We left last night's market wanting to buy 5s to 9. That seems reasonable right now. And then 1 to 29. No news to drive today's trading. So that's it for the note. 15 is pretty aggressive. Leaning against 20 is not. So that 19 to 23 area would be prime sell territory. We're trading below 16. It was rejected overnight. So that current resistance is at 16 to 18 as the market opens. Yeah, the knob spread widened a little bit last night. Didn't break out. So the long-term fundamentalist is still playing for softening business conditions. Most of the news, when you get past the headlines, does show economic weakness. I put the Goldman spiral graph up yesterday. Shows a significant drop in their economic activity around the globe between November and December. Okay, our 3-2-1 methodology, a limit sell against high volume numbers, especially in a no news environment, is a great trade. If about 25% of the time, the market will just quickly reject this number. If it doesn't quickly reject it, you usually trade around that number for an hour and a half or 2 hours, and you can see we traded around it for about 3 hours. So it's about as safe as you can get for resting limit buys and sells. We have resistance at 20 to 24, so 19 to 23 is sell 1, 27 to 31 is sell 2. On the buy side, 1 to 5, we'll get started. May have to pay 9s. A lot of it just is going to be dependent upon which the E-mini does in 25 to 29. Okay, the option expiration for financials is next Friday. This market will really start to wind down probably on Tuesday of next week. And the financials do not trade well without news between Christmas and the New Year's. The indexes do. And I don't see anything out there that'll stop the contract from trading on new highs for the years at the end of the year. It's what the Fed wants. We don't have a lot of the short side of the market showing its hand. It's done on an individual stock basis, but nobody's out there banging the indexes, taking the market lower. So at some day, the market will not respond to central bank liquidity, but these guys are throwing, $100 billion a month in the U.S., $85 to $100 billion a month at the stock market. They are your buyer, and they will print any amount of money it takes, and it's really hard to fight that. Okay, gold. We like the 1200 area as a sell yesterday. We were hoping to buy the 90 to 92 area. Didn't quite get there. So if you just want to take a look at where the market is, this 95, 98 number is where we're trading. So 1200 plus or minus sell 1, 1205 plus or minus sell 2. On the buy side, I'm going to leave it at 90 to 92. Just on the hopes that they'll get stops beneath these two numbers, then 85 to 87. And no matter what the E-mini does today, I don't think it'll influence the trading in gold all that much. Famous last words, right? Listen, you cannot discount the risk involved in trading today. I mean, it's there. And one of the things when markets get illiquid, I remember Pete Stettlemyer told us, if you really wanted to learn how to trade the right way, you'd start by trading corn. And corn was just dead. Most of us get into the market, as everybody else does, via either index or financial futures. I came into the markets via financial futures and indexes, and corn just seemed like impossibly quiet, absolutely no volatility. But what Pete was telling me is it's a way to minimize your tuition costs. And what happens in corn is that you could trade 4 days during the week and make a penny or two, and then on one day in the week you could lose a nickel to a dime. And we may be getting into that situation when we have just not a lot of liquidity, and you have people who are afraid to trade and they won't trade until forced to. The commercial entities will be doing their normal trading, securing supply or locking in processed prices. And then all of a sudden, the market goes nuts on a particular day, and everybody jumps in, and they are forced to move. Complete those positions not filled, and that's where the volatility comes from. Okay, on the euro, we like to sell against 23 yesterday. We had a 23, 23.10. Still looks reasonable today. I'll make it a 95.05 sell 1, 20 to 30 for sell 2 if it breaks out of that. You know, I don't know how currencies trade between Christmas and the end of the year, but my guess would be they'd probably be like the financials. I don't have that history. Maybe Fitz can help us out on that, our European contingent. And we'll make 60 to 70 buy 1. And then buy 2 will be 50 plus or minus. I would imagine, though, if they're like the financials, really big hedging market, that they'll slow down between Christmas and New Year's. Could be wrong, though. I know religion has left Europe and the UK compared to where it has been historically, but the holidays, based on religious holidays, vacation time, have not left Europe. That's even more entrenched than ever. So my guess is that with Europe and Britain going on holiday, that the trading get pretty quiet in currencies, but I don't know that. Okay, crude. Is kind of stuck in a range right here. So we got a 55, 50, 75, sell 1. 56, 56 and a quarter, sell 2. Explosive market on the buy side, 54.50, 54.25. That's where support is, buy 1. 53.75, 54 for buy 2. Crude slows down over the holidays as big players pack it in. The oil industry for the established companies is pretty wealthy, and they can take long, fancy vacations. The desks are manned, but quite often half of the company is on some big vacation or taking time off. So trading in crude slows down quite a bit over the holidays, unless there's a major piece of news. And to the ES, today is quad witching hour. Option expiration 20.45 on puts, 20.75 on calls is where the play was yesterday. Long-term open interest is 21.25 and 20.75 on the call side, and it's 2,000 and 20.45 on the put side. So 20.50 to 20.75 is where I expect the market to trade today. Don't see anything that will change that. The market definitely has an upward bias. And it looks like, what, 79, somewhere up in there. I don't know exactly where the high is. So the market knows there's stops above 80. Your attractor right here is in the 67 area. I think that'll be the central price. But it would be pretty easy to continue yesterday's rally. I mean, there are people that didn't get out on yesterday's close that are still caught short. And if they need the liquidity of the day session, they'll still be short when the day session bell rings. And that tells me the first move will be higher. So while I'd like to buy the 60-62 area, we may pay up. So we'll play for 60-62 buy 1. And then 55-57 buy 2 to get started. Very, very comfortable with the idea of buying 50 or better. Very comfortable with the idea of selling 75 or better. And then a second play would be stops above 80, so 79 to 81 for sell 2. So that's it. It'll take about 25 minutes to get everything going. 20 minutes to get everything up and posted. Be back with you as soon as possible in a bit.